Ladies and gentlemen, brace yourselves for a financial roller coaster. U.S. stock futures are on a downward spiral as the nation holds its breath, awaiting President Donald Trump's next move on his much-debated tariff plan. The economic landscape is teetering on the edge, with investors and everyday Americans alike questioning what the future holds. Just yesterday, the markets experienced a fleeting moment of euphoria. President Trump hinted at a more targeted approach to tariffs, igniting hopes that the dreaded all-out trade war might be sidestepped. This glimmer of optimism sent stocks soaring, as Wall Street dared to dream of stability. But hold on to your hats, because the plot thickens. In a whirlwind of statements, President Trump declared that sectors like pharmaceuticals and automobiles aren't off the hook just yet. He ominously hinted that tariffs in these areas are imminent, possibly hitting as soon as April 2nd. And if that wasn't enough to keep us on edge, he threw lumber and semiconductors into the mix, suggesting that these industries might also face levies down the road. This rapid succession of announcements has injected a potent dose of uncertainty into the markets, leaving investors in a state of suspense. The numbers don't lie. Futures tied to the blue-chip Dow have dipped by 0.14%. The broad S&P 500 futures have declined by 0.18%, and the tech-heavy Nasdaq futures have fallen by 0.24%. These figures paint a stark picture of a market grappling with unpredictability. Goldman Sachs, a titan in the financial world, is sounding the alarm. They caution investors to remain vigilant, emphasizing that while the president's recent softer tone on tariffs might seem reassuring, the reality could be far from comforting. Historically, tariffs have been wielded as a formidable negotiating tool, often starting at sky-high rates to pressure trade partners into submission. Remember the tariffs on Canada and Mexico? They began with a bang before being dialed back. Goldman warns that we might be on the cusp of a similar scenario, with actual tariff rates potentially doubling current expectations. Such a shock could send the markets into a tailspin, causing volatility that would make even the most seasoned investors' heads spin. The corporate world isn't faring much better. The initial euphoria that accompanied President Trump's declaration of a golden age has given way to palpable distress. The president's erratic trade wars, especially with key allies like Canada and Mexico, have obliterated a staggering $4 trillion from the S&P 500 in mere weeks. Consumer sentiment has plummeted to its lowest point since January 2021. CEOs and lobbyists are scrambling for clarity, their unease mounting as they navigate what they perceive as an unpredictable and volatile approach to trade policy. Yet, amidst the chaos, some see a glimmer of hope. Tom Lee, co-founder and head of research at Fundstrat, suggests that the recent stock market rally could be the precursor to a significant upward surge, a face-ripper rally, fueled by bullish momentum. He points to reports indicating that the forthcoming tariffs, slated for April 2nd, might be less severe than initially feared, with numerous countries potentially receiving exemptions. This potential alleviation of trade war anxieties could reduce market headwinds and pave the way for a robust recovery. However, the waters remain murky. The Conference Board recently reported a dip in its Consumer Confidence Index to 92.9 in March, falling short of expectations. This decline underscores the growing apprehension about inflation and the looming threat of a global trade war, further fueling market volatility. While some sectors, like energy stocks, have experienced a resurgence, others, such as utilities, have faced declines. The market's mixed performance reflects the broader uncertainty permeating the economic landscape. In these tumultuous times, staying informed is more crucial than ever. The financial landscape is shifting beneath our feet, and the ripple effects could impact us all. We urge you to remain vigilant, stay updated, and navigate these uncertain waters with caution. For the latest updates on this developing story and more, please subscribe to our channel. Your support enables us to bring you timely and accurate news that matters. Stay safe, stay informed, and, as always, thank you for watching.